Hi everyone, let's have a look at my low time frame and medium time frame bullish and bearish Elliott Wave scenarios on Bitcoin, starting with the low time frame bullish scenario where we're looking for a three-wave structure to the upside in an ABC, where the most common target area for wave C is between the 1 and the 1.236, which is currently between 27.5k and 28k. Now the target area for wave C all depends on how low this potential wave B goes, and if we look inside this wave B, we are then looking at a three-wave structure in an ABC, which is a 5-3-5 move, where potentially we have one more leg down in a 1, 2, 3, 4, and then eventually another low to be made, potentially taking the liquidity below this low over here for then a liquidity grab and a continuation to the upside. Now that means that the target area for wave C over here is going to move a little bit to the downside, because currently it's measured on the current low that's been made over here for B, but if we move that a little bit to the downside, you can see that the target area for wave C is moving down as well. And what I like about it, that is, if price is going to make a new low and the target area moves down, then the double top that we have at 27.425k, these two highs over here, is going to be inside the most common target area for wave C. So that could be very, very interesting. Currently inside this wave B, you can see that price is bouncing on the 1-to-1 over here, which is taken from the high of A to the low of this white A to the high of B, which is then the most common target area for the white wave C over here, with the 1.236 sitting at 25.2k. Now, if we zoom out just a little bit and we have a look at this structure to the downside over here, there is two potential scenarios, and I'd like to explain the impact of if you count this as an ABC or a 5-wave move to the downside. So the first scenario is an ABC, meaning that this is a 1, 2, 3, 4, 5-wave move to the downside, followed by a 3 and then another 5-wave move to the downside. In this scenario, you can see I have two vertical lines on my chart, which is a fib time, comparing the time it took to develop wave A with the time it took to develop this wave C. Now, these fib times are taken from the high to the low of A to then the high of B. And you can see that if you take the right low or the left low, it doesn't really matter. But this wave C is incredibly short in time. This wave C is like around the 23 to 38% of time compared to wave A. So it's much shorter than wave A, while usually in a zigzag scenario, which is a 5-3-5 wave structure, wave C tends to be a little bit longer on average. Now, if that is the case, then this is a potential W, followed then by an ABC in a potential X, and then a Y to the downside, because now we are then looking at a 3, 3, and then another 3 to the downside, where potentially also, by the way, this X can be finished, but more about that later. It has to be then a WXY, so a WXY. And that is going to be a little problem with the medium time frame scenario, because on the medium time frame, we are currently looking for a wave Y to the downside after a bigger X has been finished. And I'll go in more depth later in this video in the medium time frame. But a wave Y preferably is not a complex structure in another WXY inside a wave Y. Usually a wave Y, and most commonly, a wave Y has a simple corrective structure, which means a zigzag, a 5-3-5, a flat, or a triangle, but not another WXY inside a bigger Y. So that is something to keep in mind, and therefore this scenario at the moment for me is an alternative scenario, another preferred scenario, where this scenario is more preferred. So now this move to the downside is counted as a 5-wave move. So you then have a 1, 2, 3, 4, and then a wave 5 to the downside, which is then followed by a 3-wave structure that I have on the chart, the ABC, for then a wave B, and then a C to the downside, creating a zigzag structure in a 5-3-5 to the downside. Now in this scenario, can wave B already be in? So wave B then goes over there, and that means that if this is the low of wave A, we then have an A, B, C, an expanding flat where this wave C is very, very extended, which is then the end of this wave B. So we then have an A, B, and we are now looking for more downside in a wave C. Now, what I don't like is that this wave B is incredibly short compared to this wave A. I prefer wave B to be a little bit longer at least. However, it is possible that this is the high of a wave B. And if we then compare the wave A to a wave C over here, and let me actually put on the trend line so you can see what I did. If we want to compare wave A to wave B, what I think is interesting, I'm actually going to put it on my chart completely new. So we take a fib time from the beginning of A to then the low of wave A to then currently the high of wave B. Now, if wave B is already in, then that means that this wave C over here preferably is going to be a bit longer than the 1-to-1, which currently sits at the 14th of June on Wednesday, upcoming week. So preferably you want to see this move to the downside. If this is already the high of B and we're looking for a 5-wave move down, preferably it's going to end somewhere here. But in general, between the 0.618 and the 1.618 is fine as well. But in the scenario that I would prefer, because this wave B is so incredibly short, I prefer wave B to be over here and see another move to the upside to take the double top that we have, grab the liquidity, and then a move to the downside. And if I now compare wave A to then wave B, which means that we do this over here. Now we're comparing the time it took to develop wave A with the time it takes to develop wave B. Then currently wave B just crossed the 0.618 fib time, meaning that the correction so far, this structure, is about 62% of time compared to this wave A. So it has enough room for another move towards the upside potentially, and also a wave B can take much longer as well than a potential wave A. But yeah, this is basically what I would prefer. I would prefer to see this as a 5, then a 3, and then a 5 to the downside, so that this wave B is a little bit longer in time, because in my opinion, B already being in over here is a very, very short wave B. But hey, it's all about probabilities. Of course, price can move to the downside, but this is just something I do keep my eye on. And if price is going to go to the downside and not basically wick this low, so if it wicks this low, you want to see like a swing failure pattern move, wick the low and then move to the upside. But if it continues, then we do have a target box below over here between 24.8 and 24.3k to offer some support. But as you can see, that is going to be far below the most common target area for a wave C. And that then brings us to the low time frame bearish scenario, that if price is going to continue towards the downside, then we might already be in that wave C, or a bigger impulsive structure in a wave 1, 2, and then a bigger 3 towards the downside. But at the moment, I have an ABC on my chart, as you can see. So I have a 5-wave move and then a wave A, 3-wave structure in a wave B, and then possibly another 1, 2, and then a 1, 2, you know, bigger move towards the downside, and then eventually a wave C, where you can see again the 1-to-1 on the chart over here, which is the 14th of June, for then preferably wave C to end somewhere around here. Now, if price is going to move towards the downside, the wide fibs that you see are the minimum target for wave 3, and then a 1, 2, and then looking for a bigger 3 to the downside, where the 1.618 is usually a minimum target for wave 3, currently sitting at 24.8k. So if price is going to push towards the downside and hit this target, this scenario starts to become a little bit more likely from a probability perspective, which means that wave B might already be in. So in this then scenario, you expect a wave 3, 4, and eventually a 5. And then if this is still part of a wave 3, wave 4 can be quite lengthy, for then eventually a 5 to the downside to maybe end around that 1-to-1. And if this is a bigger impulse to the downside, which currently doesn't fit any of the high time frame and medium time frame counts, what does fit is a 3-wave structure. But if this is somehow a wave 1, 2, and then a bigger 3 to the downside, then you really want to see volume pick up while price is moving down. But as you can see at the moment, yeah, we did have a bit of a spike, but the average volume that you can see at the bottom of the chart right now is not too impressive. So the average volume over here for then this move towards the downside, it's okay, but preferably, of course, if this is a wave 3, you want to see the impulsivity increasing, and also volume, the average amount of volume, we want to see it increasing as well. So if we move towards this yellow target box, this scenario might become more likely. If we then zoom out to that medium time frame scenario and also talk about the reason why preferably it's not an impulsive structure to the downside, that is because I'm looking at a WXY over here, and also with the high time frame scenarios, these are all like 3-wave type of scenarios, where we're then looking for a W, which is a zigzag A, B, C in the W, followed by a wave X, and then eventually a 3-wave in wave Y, where the most common target area for wave Y is between the 1.236 and the 0.618. Between the 1-to-1 and the 1.236 is very common, but the 0.618 is also a common target and has already been hit. So basically this whole area is a potential target area for wave Y, and as you can see, it includes that yellow target box, and just below the 1.236 you also have the blue target box, which is sitting between 22.6k and 21.8k. Now in this particular scenario, wave X is then already finished, and we are then looking for that 3-wave move to the downside in a wave Y. Now if this is a wave 1, 2 and then looking for a bigger 3, 4, 5, then in my opinion it's going to be quite difficult for this to be still part of a wave Y. Preferably this is already a wave A, then this is either the high of B or the high is yet to be made, and then we get a C to the downside. And as mentioned, I would prefer to have a bit of a longer wave B ending over here, grabbing the double top and then move to the downside, so that wave B takes a little bit more time, like to be honest, right? And then eventually we would be looking for wave C to the downside, where currently if this is the high of wave B and we are looking for a downside, then the wave C 1-to-1 is again right in confluence with that yellow target box. So the yellow target box is quite important support if we're eventually gonna hit that target box for then potentially in this wave Y a zigzag in a 5, 3, 5 or a 5, preferably 3 and then a 5, where then this wave B is going to go to the right side, which is right over there. So that is something I keep my eye on. Now locally, as mentioned on the low time frame, I do expect honestly like another low to be made eventually, to take this low at least, maybe this one as well, but then possibly, depending on how that goes, another move to the upside and a swing failure pattern type of trade. Just to talk to you about it, we had some like this one over here that I explained, like when price was ranging and I was like, yo, potential swing failure opportunity. This one is a perfect example, perfect trade of a swing failure pattern scenario, where what happens is price is moving to the downside, wicking below the lows, then closing the candle above, which then is the entry for continuation. So the entry is the close, stop loss below the low, and then you're looking for higher prices. Like quite often these type of trades can give a very nice risk to reward ratio, but of course you have to wait and see how price is going to move to the downside. If it is on very, very high volume and it's continuing to push, of course there's literally no swing failure pattern type of move, type of trade over here. Right now, finally then, these CVD divergences, do we have them? Yes, we do. However, so we do have a bullish divergence, high low in price, lower low on the CVD, but after a move to the downside like this, expecting possibly another move to the downside, possibly this low being taken. This bullish divergence is not something I'm actually looking at. I prefer to look at the local CVD, which is the range that we have, right? So if we then zoom in to this range over here, yes, you could potentially say, hey, do we have some bullish divergences, higher low on price, lower low on CVD, also on blue? Possibly, yes, but after a big high volume move towards the downside, CVDs have a higher probability to be leading. So I always prefer to have a bit of a longer range in order to trust the CVDs that I now see locally, because even though you might see some local bullish CVDs, I don't really trust them because of the heavy move towards the downside. So maybe preferably, I like them to see a bit of a market structure change, like some waves, then a move down, and then create the bullish divergences. So local CVD always has priority. So to summarize this video over here, on the lower time frame, I would prefer to see another return to the upside in this then range structure in an A, B, and then eventually a wave C, where that double top is very interesting. And this scenario is then matching the potential preferred scenario of a 5, 3, 5 wave move to the downside, which is then finishing that even higher time frame wave Y over here, possibly around the yellow target box, but of course it can be lower. I hope this video was helpful or valuable to you. Please check out the most recent educational video I've made about the best trading indicator you can use in my opinion, which is the CVD. And for now, thanks for watching and subscribing, and I will see you at the next one. Bye bye.